Kindly introduce our speaker, CA Manoj Tiwari ji. Thank you.
Thank you, President sir. Bajrang bhaiya. I take the pleasure to introduce CA Manoj Tiwari ji. CA Manoj Kumar Tiwari ji is a fellow member of the ICAI and he is a graduate from the St. Xavier's College. He was adjudged National Scholar by the University of Calcutta. He scored 10 rank all over India in the intermediate exam of ICAI. He is the managing partner in Manoj Tiwari and Associate. He deals in the income tax mainly in the appellate tribunal IT. He is the academic interest too. He is a regular speaker in the ICAI forums and various study circles forums. He also contributed various articles on the direct tax subjects. With the followed hand, I request to CA Manoj Tiwari ji for his proceedings. Sir, hand over to you. Manoj sir, you are mute. Manoj sir, आप mute है.
Very good evening to all of you. BIPCA President Bajrang Agrawal ji, IPP Vishnu Tulsian ji, BIPCA CPE Study Chairman, you call Chairman na, Gopal Khetan ji, all my friends who are present in today's group discussion on Finance Bill 2022. Friends, if you look at this Finance Bill 2022, you will hardly find around 190 pages, that 90 odd pages in Finance Bill on direct tax and another 90 odd pages in memorandum. I'll request all of you to go through both 90 in Finance Bill as well as memorandum, because memorandum to the Finance Bill is about clarification. Why this Finance Bill? Why the change? They clarify each and every point. So I will be trying to discuss not all the clauses, because it not be humanly possible for me to discuss each and every clause. But yes, it will be my endeavor to see that most of the pertinent clauses, important clauses, I am able to discuss. Now, if you look at this, friends, if you look at the Finance Bill, there are a good number of changes. People have calculated it 74 changes are 74 in number.
गाड़ी नंबर क्या था बोले तो
74 in number.
डब्ल्यू भी नंबर था ना.
एक बार बाकी सबको म्यूट कीजिए तो बजरंगी जी.
और 0468 है ना संजीत कुमार. डब्ल्यू बी 19L 0468.
Yes. Thank you. Now, basically, first change which has been brought in section 2, clause 42C, slump sale. In the definition of slump sale, inadvertently there was a mistake. The mistake was they wrote sales slum sale is defined in as transfer of one or more undertaking by any means for a lump sum consideration without values being assigned to individual assets and liability in such sale. Now this sale will be replaced by transfer, because in a sum sale you will find that it is transfer of one or more undertaking by any means.
Excuse me, sir.
Sir,
सर थोड़ा आवाज बढ़ाइए ना, पार्टिसिपेंट्स बोल रहे हैं कि आपकी आवाज क्लियर नहीं आ रही है।
बढ़ा दे रहा हूँ,
गोपाल म्यूट करो सबको, हाँ डिस्टरबेंस आ रहा है बैकग्राउंड में।
बढ़ा दे रहा हूँ।
यस सर,
बढ़ा दे रहा हूँ।
गोपाल म्यूट करो सबको।
From getting any transaction involving an SDN.
मुझे भी अनम्यूट करना पड़ेगा ना फिर? नहीं, ठीक है, सबको म्यूट कर दिया आपने। वंडरफुल सर। फर्स्ट मैंने कहा स्लम सेल सेक्शन 2 क्लॉज 42C, their sale was replaced by transfer. It is in just normal clarificatory change. Next change has affected so many sections. I hope now Bajrang's sound is very clear. Bajrang Agrawal ji.
Yes sir.
Yes.
थोड़ा सा और लाउडर हो सकता है सर?
हाँ 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 हाँ, ठीक है ना, क्लियर है तो? Yes. So next change is they have brought a new concept which is known as virtual digital asset. Virtual digital asset is a new concept. You all have heard about cryptocurrency. Now, under virtual digital asset, they have inserted clause, subclause 47A. They have inserted a clause, yes. They have inserted a clause 47A, whereby virtual digital asset has been defined. For taxation, they have inserted section 115BBH. For TDS provision, 194S has been inserted, and there is amendment in section 56, subsection 2, clause 10. First thing, friends, let me tell you what is a virtual digital asset. Virtual digital asset, we know it is cryptocurrencies and we have heard of, but virtual digital asset, VDA, means any information or code or number or token generated through cryptographic means. That is first one. B, by a non-fungible token or any other asset, but it is not in whether Indian currency, it is not Indian currency or foreign currency. VDA will not include Indian currency or foreign currency. So first of all, what is virtual digital asset? Now friends, the next question was, under which head virtual digital asset will be taken? What will be head of taxation? What will be head of taxation? Salary, house property, business profession, capital gains, income from other sources. Now friends, they have not amended definition of as capital asset. Asset definition has not been changed. Capital asset defined in section 2 clause 40, that definition has not been changed. Means it can't be part of capital gain. What they have done, they have amended definition of property. They have amended definition of property Property definition is there in section 56, subsection 2, clause 7. So if you look at it, my friends, they have amended definition of property. Now property has been defined to include virtual digital assets. Property is defined to include virtual digital assets. So they have changed the definition of property. Now what is section 315 BBH? How, as we know, it will be taxed at a special rate. Virtual digital asset will be taxed at a special rate. What it is? Where the total income of an assessee includes any income from the transfer of any virtual digital asset, the income tax payable shall be aggregate of amount of income tax calculated on the transfer of such virtual digital asset at the rate of 30%. Please understand. Amount of income tax calculated on the income from the transfer of such digital asset, virtual digital asset, at the rate of 30%. And the amount of income tax with which the assessee would have been chargeable had the total income been reduced by the amount income referred to in clause A. So just imagine, my friends, it is definition of property has been changed, and in 115 BBS they have said, in subsection 2 they have said that, look at it, if you in subsection 2, notwithstanding anything in any other provision of that, no deduction of in respect of any expenditure, no deduction in respect of any expenditure or allowance or setup of any loss shall be allowed to the assessee under any provision of this act. No deduction in respect of any expenditure other than cost of acquisition or allowance or setup. No setup of loss from transfer of virtual digital asset. No setup of loss from the transfer of virtual digital asset computed under subsection 1A shall be allowed against income computed under any other provision of this act, and such loss shall not be allowed to be carried forward to succeeding years. So let's understand. Now tell me, what about, so they have clearly specified that in loss from any other asset will not be set up against profit from under VDA virtual digital asset. Loss from virtual digital asset will not be set up against any other head. Very correct. But what happens when there are multiple transactions? What happens if there are multiple transactions in respect of virtual digital asset in the same financial year? If there are multiple transactions in respect of virtual digital asset in suppose financial year 22-23, few of them yielding loss and few of them yielding profit. In few transactions you suffer losses, in few transactions you make gain. The question is whether setup will be allowed from under VDA while computing income from virtual digital asset And mind you, it will be taxable under the head income from other sources. That is point number one. It will be taxable under the head income from other sources. That is point number one. If there are multiple transactions, then loss or profit under VDA will be set up during the year. But please understand, loss from virtual digital assets will not be allowed to be carried forward. Loss from virtual digital assets suffered during the year will not be allowed to be carried forward. Means it will lapse in the same financial year. But as I told you, if there are multiple transactions under virtual digital assets, and then those profits and losses can be set up under the head virtual digital assets. Any question on this? Any question on this? It's group discussion, my friends.
Yes, sir.
Is GD only. If there are no questions, I'll presume that there are no questions before you.
We will take end of the session question answer.
अच्छा, okay, sir.
Because sir क्या वो सब unmute करेंगे तो sessions पूरा वो हो जाता है.
अच्छा, ठीक है ना, ठीक है गोपाल, ठीक है धीराज, ठीक है किसान जी, ठीक है। आप मेरे सामने कम से कम रहो, गोपाल जी रहेंगे सामने ना तो पता चलता है किसी से बात तो कर रहा हूँ।
Yes sir.
कम से कम एक आदमी सामने रहेगा तो लगता है कि दीवार से बात नहीं कर रहा हूँ।
कोई तो है सामने।
ठीक है, कोई तो है सामने, एक बंदा तो है।
ठीक है सर, आई एम फ्रंट ऑफ यू।
सो नाइस ऑफ यू।
माय प्लेजर।
तो देखिए कैसे सेटअप होगा, मैंने आपको बताया कोई सेटअप नहीं होगा, लेकिन सेम ईयर में यदि वर्चुअल डिजिटल एसेट की कैटेगरी में बहुत सारे ट्रांजेक्शंस हैं तो इनकम एंड लॉसेस विल बी अलाउड टू बी सेटअप। अब ये कैसे कैच होगा, हाउ डू यू कैच होल्ड ऑफ, हाउ डू यू गेट होल्ड ऑफ ट्रांजेक्शंस, हाउ डू यू गेट होल्ड ऑफ ट्रांजेक्शंस। तो देखिए ये 26 एस में आना चाहिए। 26 एस में कैसे आएगा, उन्होंने टीडीएस प्रोविजन बना दिया, तो टीडीएस प्रोविजन देखिए 194 एस में लाया, 194 एस। Any person responsible for paying to a resident, any person responsible for paying to a resident any sum by way of consideration for transfer of a virtual digital asset. The person who is responsible for paying to a resident any sum by way of consideration for transfer of a virtual digital asset. So the seller of VDA must be resident in India. First thing we learn from here that seller of VDA virtual digital asset must be resident, and any person responsible for paying to a resident, if you are paying by way of any sum by way of consideration for transfer of a virtual digital asset, shall at the time of credit sum to the account of resident or at the time of payment of such sum by any mode deduct an amount equal to 1% of such sum as income tax thereon. तो देखिए डिडक्शन क्या है, 1% है, टीडीएस रेट क्या है, 1% है। कौन का डिडक्ट करेगा, एनी पर्सन रिस्पॉन्सिबल फॉर पेइंग टू ए रेसिडेंट। तो सेलर ऑफ virtual digital asset, the person who is purchasing virtual digital asset will deduct TDS at the rate of 1%. अब एक बात सोचिए, यदि ये होल्डिंग इन काइंड है यदि ये होल्डी इन काइंड है तो कैसे होगा, टीडीएस कैसे होगा, और पार्टली इन काइंड है पार्टली इन कैश है, then the person who is responsible for paying will ensure that TDS is paid before he is crediting the account or making payment to the VDA holder. So you have to ensure that tax has been paid in respect of such consideration for the transfer of virtual digital asset in case there is in case a consideration is in kind, in case consideration is in kind. एक तो ये हुआ सर VDA का। अच्छा, 203A, section 203A will not be applicable. Means the person who is paying, responsible for making payment, may not have TAN, tax deduction account number. उनके पास TAN होना जरूरी नहीं है, PAN will be enough, PAN will be enough. एक और कंडीशन है सर, if consideration is payable by a specified person, if the consideration for VDA is payable by a specified person and the value or aggregate of such consideration does not exceed 50,000. What is this specified person? A specified person is HUF or individual. A specified person is HUF or individual, and value or aggregate of such consideration does not exceed 50,000. For any other person, the considerations will be, if it does not exceed 10,000, then you don't have to deduct. If the consideration exceeds 10,000, you have to deduct TDS. In case of a specified person, one more condition will apply. A specified person means a person being an individual or HUF whose sales, gross receipt, turnover does not exceed 1 crore in case of business and 50 lakhs in case of profit. So these provisions, VDA provisions, will not apply. So सोचिए, notwithstanding anything, no tax will be deducted if consideration is payable by a specified person. और यदि specified person का tax TDS tax audit नहीं हो रहा है तो डिडक्ट करना ही नहीं। यदि specified person का tax audit नहीं हो रहा है तो उसको डिडक्ट करना नहीं, whether in business or in profession. तो देखिए, और एक कंडीशन है, गिफ्ट होने पे क्या होगा सर? स्पेसिफाइड ये VDA का गिफ्ट हो रहा है, वर्चुअल डिजिटल एसेट इज गिफ्टेड, गिफ्ट दिया आपने, तो 56(2)(10) विल अप्लाई, लेकिन वर्चुअल डिजिटल एसेट का रिलेटिव को गिफ्ट दिया। वर्चुअल डिजिटल एसेट इज गिफ्टेड टू रिलेटिव। तो याद है आपको, रिलेटिव का तो 56(2)(10) में टैक्सेबल नहीं होता है। द नॉन रिलेटिव का होगा, मोर देन 50,000 होगा, इट विल बी टैक्सेबल। इफ वर्चुअल डिजिटल एसेट इज गिफ्टेड टू ए नॉन रिलेटिव, and the consideration is more than 50,000, then it will be taxable under the head VDA. तो देखिए, मैंने वर्चुअल डिजिटल एसेट आपको बता दिया। अब आइए सर, वर्चुअल डिजिटल एसेट गया। अब एक और चेंज आया सर, सेक्शन 17(2) प्रोवाइजो। याद है, एम्प्लॉयर has treated employee or his dependent in any hospital, तो क्या होगा? और एम्प्लॉयर ने यदि कंपेंसेशन दिया है उसका क्या होगा? ऑन डेथ ऑफ कोविड पेशेंट, तो देखिए 17(2) में बोल दिया उन्होंने कि ट्रीटमेंट बाय एम्प्लॉयर will not be treated as a purchase. Number one, treatment by employer will not be treated as purchase. Any amount incurred by employer, any amount incurred by employer will not be treated as purchase. Or if employer has paid the amount as compensation, employer can pay any amount और उनके हाथ में टैक्सेबिलिटी नहीं है. But if other than employer, if person or persons, if person or persons have helped COVID-19 patient, तब क्या होगा? If person or persons have helped COVID-19 patient, तब क्या होगा? 56(2)(10) में उन्होंने दो क्लॉजेस और ऐड किए, 56(2)(10), 56(2)(12) and 56(2)(13. दो clauses have been, two more clauses have been added. 56(2)(12) by any individual from any person in respect of any expenditure actually incurred by him on his medical treatment or treatment of any member of his family for any illness related to COVID-19. So just imagine, this will not be treated as income. This will not be treated as income in the hand of that person who has got the medical treatment or any member of his family has got the medical treatment. Clause 13 में देखिए, by a member of the family of a diseased person from the employer of diseased person. If employer of diseased person has paid any amount, then it will be exempt in the hands of a member of the family of a diseased person. But if it has been received from any other persons or person to the extent such sum or aggregate of such sum does not exceed 10 lakh rupees. If it does not exceed 10 lakh rupees in the hands of member of the family of a diseased person, then it is exempt. But if it is received beyond 10 lakh rupees, from the language of the finance bill, it seems any amount received beyond 10 lakhs will be fully exempt, fully taxable. The language is from any person or person to the extent such sum or aggregate of such sum does not exceed 10 lakhs. So it seems that beyond 10 lakhs it will be fully taxable. But we should give post-budget memorandum specifying that if amount is received beyond 10 lakh, then up to 10 lakh it will be exempt and balance will be taxable. That should be the intention of legislature. That should be the intention of finance bill. So at present the language suggests that amount taxable will be, if you receive beyond 10 lakhs, entire amount will be taxable, provided payment is received within 12 months from the date of such person. So amount must be received within 12 months from the date of such person. So this is gone. Now, next amendment I'll be talking about. Section 28, Roman 4. Section 28, Roman 4. If there is benefit in kind, if there is any benefit in kind, if you provide any benefit in kind, then provider of the benefit the person who is providing the benefit will deduct TDS at the rate of 10%. 10% of the benefit if amount is more than 20,000. If amount is more than 20,000 rupees, if amount is more than 20,000 rupees, then if the value of the benefit is more than 20,000 rupees, then provider of the benefit, the person who is providing the benefit, will deduct TDS at the rate of 10%. In case of individual NHUF, non-tax audit case, no TDS in section 194R. Now for tracking the benefit, till now there was no way you could track the benefit. Now they have inserted 194 capital R. If any person is providing benefit in kind, except individual NHUF, in whose case no tax audit is required. So all other categories of assessees, including individual NHUF, in whose case tax audit is required, they will deduct TDS under section 194R. But if there is individual NHUF who is engaged in business or profession and no tax audit is required, then in that case individual NHUF will not deduct TDS under section 194R. So friends, 194R. Any person responsible for providing to a resident any benefit or perquisite, whether convertible into money or not, arising from business or exercise of a profession, shall before providing such benefit or perquisite to such resident ensure that TDS has been deducted in respect of such benefit or perquisite at the rate of 10% of the value or aggregate of value of such perquisite or benefit. So any person responsible for paying to a, suppose I tell my dealers that if you achieve 1 crore sale, if your purchases from me is more than 1 crore, then you will get a car of the value of 10 lakh. You will get a car of the value of 10 lakh. Now I'll provide in the car, but I have to deduct TDS. Then I have to gross up and deduct TDS and ensure that TDS is also paid. So 194R, very important provision, 194R, TDS on benefit or perquisite of a person, business or profession. Next important amendment, section 37, offense. Friends, if you remember, section 37, if you are incurring any expenditure on account of illegality, if you are incurring any expenditure for illegal purpose, no deduction was allowed. Now they have inserted explanation 3. They have inserted explanation 3 in section 37, subsection 1. Explanation 3 is, for the removal of doubt, it is hereby clarified that the expenditure incurred by assessee for any purpose which is an offense or which is prohibited by law shall include and shall be deemed to have always included. Shall include and shall be deemed to have always included the expenditure incurred by assessee for any purpose which is an offense or which is prohibited by any law for the time being in force in India or outside India. We used to proclaim that was illegal in Malaysia. That was not illegal in India. So that expenditure will be allowed. No. Concept was, mandate was very simple. If you are incurring for any expenditure for an offense which is prohibited by law, it was not specified whether in India or abroad. That was always the intention. So that's why they have said, shall include and shall be deemed to have always included. For any purpose which is an offense or prohibited by law, any law for the time being in force in India or outside India. Second one, to provide any benefit or perquisite to a person, whether or not carrying on business or exercising a profession, and acceptance of such benefit or perquisite by such person is in violation of any law for the time being in force governing the conduct of such person. Friends, doctors, take the case of doctors. This pharma company provide them benefit. This pharma company provide them perquisite, provide them benefit. It is prohibited by under medical council guidelines. Those are prohibited under medical council guidelines. Still, pharma company used to get benefit of those expenditure, used to charge those expenses in profit and loss account. Now, since explanation 3 has been inserted, and third one is to compound an offense under any law for the time being in force in India or outside India. So even compounding of an offense, expenditure incurred even for compounding an offense under any law for the time being in force in India or outside India will be disallowed. So just see, through one insertion of explanation 3, whether you have incurred expenditure which is an offense for the purpose of an offense, whether in India or abroad, or you have provided any benefit or perquisite to any person, whether he is carrying on business or profession, an acceptance of such benefit by such person is in violation of any law or rule or regulation, then that expenditure will be disallowed. That expenditure will be disallowed. So this is one very important change. I was telling you, friends, they have made good number of amendments. Another very interesting one, very interesting amendment. Education cess. If you look at, friends, in section 40, subclause A, 40A, subclause Roman C. After explanation 2, they have inserted explanation 3. For the removal of doubt, it is hereby clarified that for the purposes of this subclause, the term tax shall include and shall be deemed to have always included any surcharge or cess by whatever name called on such. Friends, we all know that income tax is not allowed as expenditure. We all know that income tax is not allowed as expenditure. But if you look at few court judgments, Bombay High Court in the case of Sesa Goa Limited, Rajasthan High Court in the case of Chambal Fertilizer and Chemical Limited. Have held that education cess can be claimed as an allowable deduction. Bombay High Court in the case of Sesa Goa Limited, Rajasthan High Court in the case of Chambal Fertilizers and Chemicals Limited have held that in view of circular dated 18/5/1967, education cess can be claimed as an allowable deduction while computing income chargeable under the head PGB. Can you imagine education cess as expenditure? How can it be? Because tax is always inclusive of cess. But you will be proud of our own Calcutta ITAT. Discuss these two High Court judgments and have held in the case of Kanoria Chemicals and Industry, our own Calcutta ITAT, in the case of Kanoria Chemicals and Industries Limited, Q184/Coal/2018. ITA number I am saying Q184/Coal/2018. Kanoria Chemicals and Industries, our own Calcutta ITAT has held that cess is not to be allowed as deduction. And taking note of this Calcutta ITAT judgment, Finance Bill has been amended and explanation 3 has been inserted. Another very important amendment, my friend, section 68. If you look at this amendment, they have inserted first proviso. What happened to second proviso? What happened to first proviso? First proviso is inserted now. You remember, my friend, there was already a first proviso that has become second proviso. We were searching for first proviso. What happened to earlier first proviso? Well, that has been deleted. No, they have not deleted, my friend. They have made the first proviso second proviso, and now they have deleted a first proviso. Now they are saying even for loan credited in the books, even for loan credited in the books, source of source is to be disclosed. Even for loan credited in the books, source of source has to be disclosed. This will be applicable from 1st April 23, meaning thereby assessment year 23-24, financial year 21-22-23. What is the first proviso now? If you look at the language, provided that where the sum so credited consists of loan or borrowing or any such amount, provided that where the sum so credited consists of loan or borrowing or any such amount by whatever name called, any explanation offered by assessee shall be deemed to be not satisfactory. Any explanation offered by such assessee shall be deemed to be not satisfactory unless the person in whose name such credit is recorded in the books of such assessee also offers an explanation about nature and source of such sum so credited, and such explanation in the opinion of assessing officer has been found to be satisfactory. Look at the first proviso. Provided that where the sum so credited consists of loan or borrowing from or any such amount by whatever name called, any explanation offered by such assessee shall be deemed not to be satisfactory unless the person in whose name such credit is recorded in the books of such assessee also offers an explanation about the nature and source of such sums of credit. So friends, even for loan, earlier it was for share capital. Now even for loan, you have to disclose, you have to discuss, you have to disclose source of source. Source of source even for loan. Now the question was, it will be for current year or for earlier previous year? Whether it will be for current year or earlier previous year also. In my opinion, in my personal opinion, it will be only for the financial year for which assessment is being taken, considered. It will be only in case of new loan or borrowing. It will be only in case of new loan or borrowing. If borrowings are being continued in the book, if loans are being continued from earlier previous years, that will not be covered. This was a question people had in their mind, so the clarification. They have inserted one section after section 79. Section 79A has been inserted. Section 79A has been inserted, saying that no setup will be allowed from undisclosed income. No setup will be allowed from undisclosed income which has arisen due to section 68 to 69. Section 79, look at it. Notwithstanding anything contained in this act. Notwithstanding anything contained in this act, where consequent to a search under section 132 or a requisition under section 132A or a survey under section 133A, other than TDS survey, the total income of any previous year of an assessee includes any undisclosed income. Total income of any previous year of an assessee includes any undisclosed income. No setup against such undisclosed income of any loss, whether brought forward or otherwise. Unabsorbed depreciation shall be allowed to assessee under any provision of this act in computing his total income for such year. So clear, my friends, that against undisclosed income, no setup, whether brought forward or no setup of any loss, whether brought forward or otherwise, unabsorbed depreciation and all. This is 79A. This is 79A. ATCCD. Remember, my friends, for central government employees, government contribution up to 14% was allowed as deduction in case of government employees, central government employees. But for state government and other employees, it was 10%. Now state government and central government employees, for both 14% is allowed. For both state government and central government employees, 14% of employer contribution will be allowed as deduction. 14% of employer contribution contribution. Earlier, it was only allowed in case of central government employees. Now, even for state government. What about others? Others remain at 10%. What about others? Others for others 10% remain. For others 10% remain. I'm talking about this as national pension system. National pension system. Now even state government contributing to national pension system, then for their employees, contribution by state government to the extent of 14% will be allowed as deduction in the hands of state government employees under section 80 CCD. I hope this part is clear. Very simple, very innocuous amendment. 80DD. Very unfortunate. If there is some dependent, then deduction will be allowed even if annuity can be received after the 60 years of lifetime. Deduction to be allowed during lifetime once the person who has taken insurance has reached the age of 60 years. The person who has taken insurance has reached the age of 60 years, then annuity can be received by dependent with disability, even if the insurer member is alive. 80DD, clarificatory change, nothing of that sort, which requires threadbare discussion. Registration of IAC startup extended by 1 more year. Earlier it was 31st March 22. Now this startups can be registered up to 31st March 2023. 31st March 2023. Even 92 CA is faceless now. Dispute resolution panel is faceless now. For tribunal, the tribunal will also become faceless, but they have extended the date. Tribunal, in case of tribunal, they have this dispute resolution panel, transfer pricing, and tribunal. The dates have been extended up to 31st March 2024. So even transfer pricing, dispute resolution panel, and tribunal, they'll become faceless by 31st March 2024. So apna face छिपा लीजिए, everything will become faceless. One very important change, very important change, updated return. Updated return, my friend. They have inserted section 139, subsection 8A. If you look at market reaction of assessee, reaction of industry, they are very happy. They are saying that you can file updated return once this finance bill is approved. Once this finance bill is approved, we can file updated return up to 24 months from the end of relevant assessment year. Whether we have filed our return or not, irrespective of the fact whether you have filed a return or not, you can update your return within 24 months from the end of relevant assessment year. Now, let's look at the conditions, because this is a very important change. Subsection 8A inserted. subsection 8A, any person, whether or not he has furnished a return under subsection 1, that is return on time. Number 4, subsection 4, belated return. Subsection 5, revised return. Any person, whether or not he has furnished a return on time, or filed a belated return, or filed a revised return for an assessment year. For an assessment year, may furnish an updated return of his income or income of any other person in respect of which he is assessable for the previous year relevant to such assessment year in the prescribed form, verified in such manner, and setting forth such particulars as may be prescribed at any time within 24 months from the end of relevant assessment year. So they have given you 24 months. That if you are talking about assessment year 22-23, then you can update it up to 31st March 2025. So if your mistake is genuine, if there is genuine mistake, you have forgotten to take an income, you have missed one income, you thought it's an exempt income, but that income is taxable, then you can update your return at any time within 24 months from the end of relevant assessment year. Whether you have filed your return or not is also irrelevant. Whether you have filed belated return is also irrelevant. Whether you have filed revised return is also irrelevant. You can always update, may furnish an updated return, your return or return of any other person in respect of which you are assessable in the prescribed form, verified in such manner, and setting forth such particulars. Now, what are the conditions? Provided that provision of this chapter shall not apply. Subsection 8A will not apply, shall not apply. Provisions of subsection 8A shall not apply if updated return is a return of loss. If you are filing a return of loss, it is not allowed. If your updated return has the effect of decreasing total tax liability, if your updated return has the effect of decreasing total tax liability determined on the basis of 139.1, 139.4 or 139.5. If you are decreasing the tax liability, then you cannot file updated return. If your updated return results in refund or increases the refund, if your updated return results in refund or increases the refund due on the basis of return furnished. So, who cannot file this updated return? Provided further, second provided further that a person shall not be eligible to furnish an updated return under this subsection, where if such has been initiated under section 132 or books of account or other documents have been requisitioned under section 132A, then you cannot file updated return. A survey has been conducted under section 133A, other than TDS survey. A notice has been issued to the fact that any money, bullion, jewelry or valuable article or thing seized or requisitioned in case of other assessee belongs to such person. So if money, bullion, jewelry has been seized or requisitioned, then also you cannot revise your, they cannot update your return. No updated return shall be furnished by any person for the relevant assessment year where updated return has been furnished by him under this section 4. If you have already furnished updated return, means you cannot file two updated returns or any proceeding for assessment, reassessment, recomputation or revision is pending or has been complete. 148, 263, either is pending or has been completed. Then in that case, no updated return can be filed by you. If there is, if the assessing officer has information in respect of such person under Smuggler and Foreign Exchange Manipulator Act or Prohibition of Benami Transaction Act, then also you cannot file. If there is any information received by him under section 90 or 98, any prosecution is pending, is initiated, then also you cannot file the updated return. In section 139, the return is accompanied by proof of payment of tax as required. So you must pay tax, then only you file return. Otherwise, 139.1, your return, and 139.9, your return will become defective. Unless return is accompanied by proof of payment of tax, unless your updated return under subsection 8A is accompanied by proof of payment of tax, it will be treated as defective return under section 139.9. So because of updated return, they have inserted 139 subsection 8A. They have also inserted a clause in 139.9 defective return. They have also inserted one more section, 140 capital B. You have to pay additional tax for filing of updated return. For filing of updated return, you have to pay additional tax plus interest. Please understand. For filing of updated return under section 139 subsection 8A, you have to pay additional interest and tax. Now, how that will be calculated? That's the question. That should be the $1 million question. How additional interest and tax will be calculated? Where no return of income under subsection 1, subsection 4 has been furnished by the state. If no return of income has been furnished by the state and tax is payable, if you have not filed any return, and tax is payable on the basis of return to be furnished after taking into account. Now you are furnishing updated return under section 139A2. Tax is payable. Now how much tax is payable after taking into account? What you have to consider? Even though you have not filed any return, you compute your tax liability minus tax already paid as an advance tax, minus tax deducted or collected of source, minus relief of tax under section 89, minus relief of tax or deduction or tax claim under section 90 or 91 on account of tax paid in a country outside India. any relief of tax under section 98 on account of tax paid in any specified territory, any tax credit MAT, any MAT tax credit. All these deductions you shall be liable to pay such tax together with interest and fee payable under any provision of this act for the delay in furnishing of return or any default or delay in payment of advance tax, along with payment of additional income tax computed in subsection 3. So once you have calculated this, you have to wait for subsection 3. What subsection 3 says? Subsection 3 says that for the purposes of subsection 1, where you have not filed any return, additional income tax payable at the time of furnishing return shall be equal to 25% of aggregate of tax and interest payable. 25% of aggregate of tax and interest payable as determined in subsection 1, if such return is furnished after expiry of time available and before completion of 12 months from the end of relevant assessment year. And 50% of aggregate of tax and interest payable as is specified in determined in subsection 1, if such return is furnished after the expiry of 12 months but before completion of 24 months. Now, if you have filed your return, first we talked about when you have not filed your return. If now subsection 2, 142B, 140B, 140, section 140 capital B, subsection 2, where return of income under subsection 1 or subsection 4 or subsection 5 of section 139 has been furnished by us and tax is payable on the basis of return to be furnished by such assessee under subsection 8A of 139. After taking into account all those relief, TDS, foreign tax, MAT credit, if you have received the refund, you have to add the refund. If you have received the refund, you have to add the refund. And naturally, subsection 3, 25% of aggregate of tax and interest payable. If you are filing the updated return within 12 months, and subsection 2 to talk about 50% of aggregate of tax and interest. Now, additional income tax. If you have filed your return under section 139(1) on time, then 234A interest will not be calculated. If you have filed your original return, mind my language, if you have filed your original return under section 139 subsection 1, then 234A interest will not be applicable. They have defined additional income tax. For the purposes of computation of additional income tax, tax shall include surcharge and cess on such. So friends, if you have filed your return on time under section 139 subsection 1, then 234A will not apply. Then 234A will not apply. I tried my level best to make you comprehend. Subsection 139 or section 139 subsection 8A, updated return. Next change. It is gone. So 139 subsection 8A, section 140B has been Section 139 has been amended. 139(9) has been amended. Now look at it. Government brings a new section 148A, and then it amends 148A in toto. Section 148A has been amended in toto. If you look at section 148A now, it is almost 10 years, almost in all cases. It is 10 years, almost in all cases. Earlier it talked about asset. Now it covers entry, expenditure. Even so-called notice can be issued without approval. Even so-called notices can be issued without approval. So let's look at it. Section 148A, another big change. Another big change. Look at it, my friends. In section 148, a proviso has been inserted. Second proviso, provided further that no such approval shall be required. No such approval shall be required where the assessing officer with prior approval of a specified authority has passed an order. Under clause D of section 148A, to the effect that it is a fit case to issue a notice under this subsection. So entire thing gone. In explanation 1, earlier they talked about CAG objection, Comptroller and Auditor General objection. If they have flagged anything, now look at it. Any audit objection to the fact that assessment in the case of assessee for the relevant assessment year has not been made in accordance with provisions of this. Any audit objection means what? Earlier it was Comptroller and Auditor General objection. They have said any audit objection. So you have earlier in section 148 we used to say that you have opened it on the basis of audit objection. So where is the satisfaction of assessing officer? And we used to win cases. Now it is any audit objection. It will be regarded as information. Any information received in 90 or 98. Any information made available to assessing officer under the scheme notified in 135. Any information is required action in consequence of tribunal or court. So what it is? And you look at it, it seems 148B. If you look at 148B, it seems that everything has been covered. Now, if you in 149, in clause B has been substituted. 149 subsection 1 clause B has been substituted. Earlier it was for an asset. If 3 years but not more than 10 years have elapsed, mark the language. 139 subsection 1 clause B. Now clause B has been substituted in entirety. If 3 years but not more than 10 years have elapsed from the end of relevant assessment year. Have elapsed from the end of relevant assessment year unless the assessing officer has in his possession books of account or evidence or documents which reveal that the income chargeable to tax represented in the form of asset. Earlier it was only an asset. If 3 years but not more than 10 years have elapsed from the end of relevant assessment year, unless the assessing officer had in his possession books of accounts or other documents or evidence which reveal that income chargeable to tax represented in the form of an asset. Look at the categories added. Expenditure in respect of a transaction or in relation to an event or occasion. Suppose you threw a party of 3,000 people. Suppose you threw a party of 3,000 people and you incurred huge amount. You incurred 1.5 crore rupees. Expenditure in respect of a transaction in relation to an event or occasion. You celebrated such an event or occasion and you incurred expenditure. Earlier this was not there. Earlier it was only an asset or an entry or entries in the books of account. Entry or entries in the books of account which have escaped its assessment amounts to or likely to amount to 50 lakh rupees or more. So earlier, since it was only an asset, we were very happy. Then unless it is represented by an asset, you cannot touch me. Now look at the addition. Expenditure in respect of a transaction or in relation to an event or occasion or an entry or entries in the books of account. What else? What is left out? Tell me, my friends. What is left out? From my point of view, if you ask me, nothing is left out. Nothing is left out. If this be the proposition, only God can help us because government will not. Now some better amendment. You must be amazed why I am using the word better. If you look at, my friends, if in ABC, basically I am talking about your notice of demand, section 156. In notice of demand under section 156, after assessment, assessing officer issue DN under section 156. If I have got any relief where my tax, interest, penalty, fine or any other sum in respect of which a notice has been issued is reduced by IBC under IBC code, is reduced by adjudicating authority under insolvency and bankruptcy code. We used to approach assessing officer requesting him to revise his DM under section 156. Assessing officer plea was very simple, that I am not authorized under any other section of law to issue DM or modify my DM. modify my notice of demand. So they have said that if you have got any relief from tax, 25%, 50% or zero, by adjudicating authority under IBC, Insolvency and Bankruptcy Code 2016, you can approach the assessing officer, and assessing officer will modify the demand in conformity with such order, and shall thereafter serve on assessee a notice of demand specifying the sum payable. And such notice of demand shall be deemed to be notice under section 156. And they have inserted section 156 capital A. So if you have got any relief, then you can enjoy that. An assessing officer will be pleased to issue another DM under section 156 capital A. They are talking about lesser litigation. Gopalji, they are talking about lesser litigation. They are saying that department will not file a case, and for that 158 capital AB has been inserted. That is clarificatory almost. Another subsection in section 170. In section 170, since we all know that when we approach court or tribunal, NCLT, there is one appointed date for merger, demerger, and court date, and there is a huge time lag between appointed date and court sanctioning such merger or demerger. So for that, to take care of that, they have inserted subsection 2A, notwithstanding anything contained in subsection 1 and 2, where there is a business reorganization, assessment or reassessment of other proceedings made on the predecessor during the course of pendency of such organization shall be deemed to have been made on successor, and all provisions of the Act shall apply accordingly. We used to say that assessment has been made on successor, has not been made on successor. Assessment has been made on predecessor. And after appointed date, predecessor is no more existing. He has been succeeded by successor. Now all those arguments have been taken for a toss. All those arguments are, the wind has sailed out of those arguments. Now they are saying that notwithstanding anything contained in subsection 1 and 2, where there is a business reorganization, the assessment or reassessment or other proceedings made on the predecessor during the course of pendency of such reorganization shall be deemed to have been made on the successor, and all the provisions of this Act shall, so far as may be, apply accordingly. So all our arguments has been taken for a toss. After section 170, they have inserted another subsection, section 170 capital A. Notwithstanding anything to the contrary contained in 139, in case of business reorganization, where prior to date of order of a high court or tribunal or adjudicating authority, any return of income has been furnished by the successor. Any return of income has been furnished by successor for any assessment year. Such successor shall furnish within 6 months from the end of the month beneath such order a modified return in such form or manner as may be prescribed. So if you have furnished any return before order of the court, within 6 months you can place or modify the return. So this is, they have taken care of so many problems which was happening to us. So even this 170A is welcome. Welcome provision. Those now 194 IA. Friends, you know that if you transfer immobile property valued more than 50 lakhs, then in that case 1% TDS has to be deducted by the buyer, the person who is paying the consideration. Now it was 1% of consideration, 1% of consideration. Now it is 1% of assessable value or actual consideration, whichever is higher. 1% of assessable value or actual consideration. Suppose actual consideration is 50 lakhs. Assessable value is 52 lakhs. So your TDS will be 1% of 52 lakhs. And mind you, here that 10% will not apply. Here that 10% will not apply. Why 10%? That 10% was for difference. We can submit a post-budget memorandum. We can submit a post-budget memorandum, but even then, TDS to be deducted will be 1% of assessable value or actual consideration, whichever is higher. Friends, they have amended Section 271 AAB, 271 AAC, 271 AAD. They have inserted another section 271 AAE. And everywhere they will specify that penalty. Now penalty can be levied by CIT appeal also. There was a question, my friends, from a good number of my friends, that why on earth CIT appeal will levy penalty. Their view is that CIT appeal can levy penalty only in case of enhancement. But my friends, this view is wrong. In case of an appeal, CIT appeal is also assessing officer. In case he is hearing appeal, CIT step into the shoes of assessing officer. CIT appeal is step into the shoes of assessing officer. And since he had stepped into the shoes of assessing officer, this is very common. That is why even if assessing officer has not levied penalty in section 271 AAB, AAC, AAD, newly inserted AAE, now penalty can be levied by Commissioner of Income Tax appeal. Now the worst part of finance bill. Friends, you must be knowing. It is within your knowledge. It is within your knowledge that there are two types of assessment. Two types of a scheme. One is 10 subsection 10 clause 23C, and another is section 11, 12 and 30. Two schemes for trust. And we could opt for 1023C or 1112, whichever suited to us. Now, if you look at the present scheme, what they have done, they have devoted 20 pages. In the finance bill, you will find they have devoted 20 pages to achieve this. What they have done, whatever was not there in 11-12, they have imported it from 1023C. Whatever was not there in 1023C, they have imported it from 11 and 12. So basically, now those schemes, scheme 1 and scheme 2, if you look at, have become identical. Now, let me first tell you what was the provision to make you understand. I'll try my level best to make you comprehend, but at the end you will say it is very confusing. I know. At the end you will say that it is very confusing. Don't blame me for that. For that you have to be also, you have to go through the provision. I will not say that you don't know the provision. You must be knowing the provision. Some people may be knowing provisions far better than me. I do admit. I'm not that person who will say I'm the only person who knows the provisions. No, never. Every chartered accountant has knowledge, adequate knowledge, expert knowledge. So let's first of all understand what are those provisions. Friends, under 1023C, let's name it scheme 1. 3IAB, 3IAC, 3IAD, 3IA, and Roman 4, Roman 5, Roman 6, Roman 6A. 3IAB, educational institutions wholly and substantially financed by government. 3IAC, hospital and medical institutions wholly and substantially financed by government. 3IAD, educational and other institutions whose turnover is up to 5 crore. Educational and other institutions whose turnover is up to 5 crore. 3IAD, medical and hospitals and other medical related institutions whose turnover is up to 5 crore. Then Roman 4, charitable institutions. Roman 5, religious institutions. Roman 6, educational and other institutions whose turnover has exceeded 5 crore. Roman 6A, medical and hospitals whose turnover has exceeded 6 crore. Friends, you must be remembering 3IAB, AC, AD, AE do not require any approval. That is 1023C, 3IAB. What was that? Educational and other educational institutions. Educational institutions substantially financed by government. Only return was required. 3IAC, medical and hospitals, medical institutions and hospitals substantially financed by government. No No approval was required. Only return filing was required. CIAD, educational institutions whose turnover is up to 5 crore. CIAE, medical and hospital whose turnover is up to 5 crore. 3IAB, 3IAC, 3IAD, 3IAE. All these do not require any approval. So these are out of the MBIT. What are those in MBIT? 1023C, Roman 4, Roman 5, Roman 6, Roman 6. Roman 4, charitable institutions. Roman 5, religious institutions. Roman 6, educational institution whose turnover has exceeded 5 crore. And hospital and medical institutions whose turnover has exceeded 5 crore, Roman 6. So 1023C, Roman 4, Roman 5, Roman 6, Roman 6, and 11 and 12. 11 and 12 is scheme 2. Let's name it scheme 2. Now, on a broader side, if you look at on a broader side, what are the schemes? They have said that for religious institutions, same 23C Roman 5. That is religious institution, that is temple, mosque, gurudwara, church. If you are getting donation, for these, then that will be treated as corpus donation. If you have got donation for maintenance, repairs and maintenance of gurudwara, temple, mosque, church, that will be treated as corpus, provided you use it for the purpose for which it was received. You do not donate it to any other religious trust. You maintain the investment in the mode specified in 11.5. And identical, these are identical provisions have been brought in 11 and 12. Friends, you remember that if you have not incurred up to 85% of the receipt, if you have not applied up to 85% of receipt during the previous year, then we used to file Form 10 under section 11(2) before assessing officer, before the due date, saying that we will use it within 5 years. And the provision was provided, it was provided in the scheme that if you do not use within 5 years, it will be taxable in the 6th year. Now the change has been made. It will be taxable in 5th year only if accumulations cannot be used within 5 years, or any provisions are contravened, then it must be taxable. It will be taxable in the 5th year only, not in the subsequent, not in the 6th. In scheme 1, there was no question of filing anything for accumulation. Identical provision has been introduced in 1023. 3, if you pay any amount to your related party, friends, you must be remembering that if you pay reasonable amount to a related party, if you pay a reasonable amount to a related party, reasonable amount. If you pay reasonable amount, then no question of anything. But if you pay anything in excess of reasonable amount, then there will be penalty imposed under 271 AAE, and penalty will be 100% of excess amount, 100% of the amount which AO thinks is unreasonable. In case of first offense, and for subsequent offense, 200%. Mind you, same amount, penalty of same amount. One more thing, for approval, prescribed authority, they used to say that you have to approve the prescribed authority. Now they have said principal commissioner or commissioner. Now they have specified principal commissioner or commissioner. So if you look at those 20 pages, they were inserted through explanation 1A. That if you have received donation for temple, mosque, gurdwara, church, then such amount shall be applied, such corpus shall be applied only for the purpose for which voluntary contribution was made. Does not apply such corpus for making contribution or donation to any person, maintain such corpus, and invest under section 11. If you look at this, just identical one, regarding audit. If you remember, my friend, keep or maintain, there is the provision was they have to audit account. They have to get its accounts audited. But nowhere keeping and maintenance of books of account was specified or prescribed. Now from 1st April 2023, that is from assessment year 23-24, financial year 22-23. Keep and maintain books of account and get its accounts audited. That has also been there. So identical changes, both are looking like mirror of each other. For cancellation, principal commissioner has to pass the order within 6 months of the quarter in which he was referred about offense. So basically, if you look at it, my friend, it is so simple, but it's very cumbersome. Very cumbersome. You will say that it is really very cumbersome budget. At least the provisions relating to charitable trust. If you look at two schemes, scheme 1 and scheme 2, whatever was not there in scheme 1 has been brought from scheme 2. Whatever is not there in scheme 2 has been brought from scheme 1. And both are looking identical. And for this, they have devoted 20 pages. Gopal ji, Gopal Ketan ji, stopping over here. I'll expect.
No.
Yeah, I'll finish because you see, there are another 20 provisions which I can discuss, but most of them which are pertinent. The pertinent provisions I have tried my best to discuss. I hope even 1% is
Participants, they can ask their queries to unmute themselves. Who want to ask any questions, they can unmute themselves.
मनोज जी, महेंद्र नाटा बोल रहा हूँ.
अरे बाबा, बोलिए.
I need one clarification regarding section 194R.
194
R.
बोलिए सर.
You said that if there is no tax audit, then that individual or HUF is not required to deduct TDS.
Yes.
But suppose I have got a turnover of more than 1 crore rupees. But still I am not required to tax audit, get my books accounts audited because of that particular individual is opting for section 44 AD.
वो नहीं होगा सर, वो 50 लाख 1 करोड़ वाला ही रहेगा.
But there is no reference of section 44 AB in that section. They are simply saying if turnover exceeds 1 crore, does not exceed 1 crore.
मैं बोल रहा हूँ सर कि टर्नओवर 50 लाख और 1 करोड़ वाला ही रहेगा. उसके अलावा सारा कुछ करना पड़ेगा, डिडक्ट करना पड़ेगा.
नहीं, even if the turnover is more than 1 crore.
हाँ, तब करना पड़ेगा ना सर.
हाँ, तब अगर टैक्स ऑडिट नहीं है तो भी करना पड़ेगा ना.
करना पड़ेगा एकदम.
हाँ. ओके सर.
क्लियर हो गया ना? Because you are going by referring to 44 AD and all. वहाँ पे उन्होंने 50 लाख 1 करोड़ ही लिखा है और कुछ नहीं लिखा है. Maybe they will clarify, maybe clarification आ जाए महेंद्र जी. शायद क्लेरिफिकेशन आ जाए तो अच्छा रहेगा. पोस्ट बजट मेमोरेंडम का एक थॉट भी है आप लोगों का. जो पोस्ट बजट मेमोरेंडम जाएगा विपका का, उसमें ये गलत है, ये नहीं होना चाहिए. बिकॉज इसका टैक्स ऑडिट नहीं है, मतलब उसका भी तो टैक्स ऑडिट नहीं है.
हाँ, उसका भी टैक्स ऑडिट नहीं है.
टैक्स ऑडिट नहीं है तो वहां भी होना चाहिए. लेकिन वहां उन्होंने रेफर जो किया है, अभी जो प्रोविजंस हैं वो तो यही बोलते हैं 50 लाख 1 करोड़.
हाँ, 1 करोड़ बोल रहे हैं खाली कि अगर 1 करोड़ से एक्सीड करेगा तो काटना पड़ेगा.
अभी तो जो प्रोविजन है उसके हिसाब से मैंने कहा. लेकिन उनको एक पोस्ट बजट मेमोरेंडम जा सकता है इसके ऊपर.
बट सर करंटली अभी भी जो प्रोविजन है 194A हो चाहे 194C हो, उसमें भी यही क्राइटेरिया, उसमें भी टैक्स ऑडिट का क्राइटेरिया नहीं है, टर्नओवर क्राइटेरिया है.
टर्नओवर क्राइटेरिया उन्होंने टर्नओवर ही दिया है इस बार.
हाँ. ओके, थैंक यू सर.
और बताइए मैम जी, और बताइए.
बस एकदम बढ़िया सर.
और सर
हाँ,
और बोलिए. का क्वेरी खत्म हो गया. कोई क्वेरी नहीं है, मतलब या तो पूरा पठान का.
हेलो सर, मेरा क्वेरी है
केतन जी बोल.
वर्चुअल एसेट्स को लेकर. केतन बोल रहे हैं.
हाँ, बोलिए केतन जी बोलिए.
वर्चुअल एसेट्स को लेके इसमें अपने वर्चुअल डिजिटल एसेट्स को, इसमें फिनेंशियल ईयर 21-22 के लिए कुछ भी नहीं बोला है इसमें बजट में.
नहीं बोलना.
इस साल अगर हम सेल करके प्रॉफिट गेन हो, उसका क्या ट्रीटमेंट करेंगे?
कुछ नहीं करेंगे.
हाँ,
कुछ नहीं करेंगे
इस साल, मतलब एग्जाम ले लेंगे उसको.
कौन से साल का बात कर रहे हैं भैया?
21-22 का.
भाई
फिनेंशियल ईयर 21-22.
भाइयों 22 से आ रहा है तो फाइनेंशियल ईयर. That provision will be enforced from financial year 22-23.
अच्छा, ठीक है. हाँ, ठीक है. थैंक यू सर.
हाँ जी. केतन जी का क्वेश्चन नहीं है. हाँ जी, और आगे.
पूछना है क्या आपको?
सर गुड इवनिंग. मेरा एक क्वेश्चन था सर.
बोलिए राहुल जी बोलिए.
सर डिजिटल वर्चुअल एसेट्स तो हम लोग ऐसे भी शॉर्ट टर्म करके देते थे उसमें, वो नॉन एसटीटी वाला।
देखिए यहाँ पे ना कोई कंसेप्ट नहीं है शॉर्ट टर्म लॉन्ग टर्म का, क्योंकि उन्होंने जो कैपिटल एसेट का डेफिनेशन में नहीं लाया उसको, they have not brought it under the definition of section 240. उन्होंने प्रॉपर्टी का डेफिनेशन चेंज किया, मतलब 5627 में they have changed the definition of property. तो ये एसेट में नहीं आएगा, ये प्रॉपर्टी में आएगा। प्रॉपर्टी में आएगा तो कैपिटल एसेट का एम्बिट से चला गया, मतलब कैपिटल गेन का एम्बिट में नहीं गया।
अच्छा ठीक है सर, ओके गॉट इट सर।
क्लियर हुआ? टेक्निकल क्लियर हुआ क्या? कैपिटल एसेट मतलब 240, तब कैपिटल गेन, कैपिटल लॉस, सम कैपिटल एसेट ये सब होता, तो उसमें तो आया।
हाँ
ये प्रॉपर्टी में आ गया 5627 में जो प्रॉपर्टी का डेफिनेशन है, तो वहां आ गया, तो कैपिटल गेन का चैप्टर तो चला गया, और दूसरा उन्होंने स्पेशल रेट दे दिया बीबीएस में।
ठीक है, मतलब समझ गया। मतलब ये सर ऑलरेडी टैक्सेबल तो था ही एनीवेज इसके थ्रू गेन, अब इसको ऑर्गेनाइज कर दिया।
नहीं टैक्सेबल नहीं था ना।
नहीं रखे सर, अरे सर हम लोग तो फिर फालतू का टैक्स भरे। अच्छा ठीक है, ओके सर।
कभी नहीं था, कभी नहीं था।
ठीक है,
ले लेते ना हम, सर से तो नहीं लगता था।
कोई
नहीं तो सुनिए, हम लोग तो दूर से प्रसाद देके भगा देते थे ना। कंसेप्ट तो वो था सर।
क्या होता है, एक्ट में स्पेसिफाई नहीं है, टैक्स में कोई इक्विटी नहीं होता। यदि आपका आइटम टैक्सेबल नहीं है तो वो टैक्सेबल नहीं है, काम खत्म।
ठीक है सर, मेरा तो यही क्वेरी था। थैंक यू सर।
तो सर प्रेस मीट में शायद बोला गया था कि ये टैक्सेबल तो है ही।
हाँ, कहाँ पे,
मतलब टैक्सेबल पहले से है।
कौन बोला?
शायद तरुण बजाज जी का था।
देखिए बजाज साहब रेवेन्यू सेक्रेटरी है, वही हाईली नॉलेजेबल पर्सन, वो जब बोले
हाँ।
तो जरूर टैक्सेबल था। कल उनसे इतना ही पूछना है कहाँ टैक्सेबल था, इतना ही।
हाँ नहीं, ये तो हम भी सोच रहे थे।
नहीं, वो वेरी हाईली
हाँ।
नॉलेजेबल पर्सन, रेवेन्यू सेक्रेटरी साहब, तो उनसे खाली यहाँ पूछना था कहाँ टैक्सेबल था और क्या रेट पे टैक्सेबल था,
हाँ
और क्या एसेट में आता था, कैपिटल एसेट में आता था, प्रॉपर्टी में आता था, कहाँ आता था। असल में क्या होता है ना सर कि वो रेवेन्यू सेक्रेटरी है और मैं केवल चार्टर्ड
हाँ।
अकाउंटेंट हूँ, मैं मनोज तिवारी हूँ, तो अंतर तो है। हाँ जी
सर एक क्वेश्चन और था।
हाँ महेंद्र जी,
ये डिजिटल एसेट में बोल रहा है कि दिस प्रोविजन शैल नॉट अप्लाई इफ द रिटर्न अपडेटेड रिटर्न रिजल्ट्स इन अ ट्रांसफर एंड रिफंड।
आप डिजिटल एसेट में नहीं हो, 139(8) में हो अपडेटेड।
हाँ सॉरी, अपडेटेड रिटर्न में अगर वो रिफंड आ रहा है, इफ इट रिजल्ट्स इन रिफंड देन एसएससी इज नॉट एलिजिबल टू फाइल अपडेटेड रिटर्न। Suppose he filed his original return under section 139(1) and there was a refund of rupees 1 lakh, and he did not receive that refund, and thereafter he found some additional income by virtue of which his refund comes down to rupees 10,000. What would happen in that case?
He will file.
In that case, we can file updated return.
It is decreasing the refund.
Decreasing
the refund.
But that section is using the language results in a refund.
तो नहीं होगा, नहीं वैसा नहीं है यहाँ तो रिफंड डिक्रीज हो गया। रिफंड लायबिलिटी बढ़ गई ना, टैक्स लायबिलिटी बढ़ गई।
हाँ, लायबिलिटी आ जा रही है। Effectively there is a liability of 90,000 in that case.
लायबिलिटी आ रही। इंटरप्रिटेशन बोल के हम लोग कर रहे हैं, लेकिन और कुछ we are only interpreting it. और महेंद्र जी आपका थॉट प्रोसेस शेयर करने से मैं भी सीखूंगा।
अरे
थॉट प्रोसेस ही शेयरिंग है सर, और है क्या? मैं भी तो जो शेयर कर रहा था कोई कौन सा आकाश से थोड़े, मुझे भी तो जो समझ में आता है उतना ही। हाँ गोपाल जी, हम लोग बहुत थे लेकिन हम 100 पे रुके हैं, बहुत सारे लोग हो गए थे, सब लोग छोड़ के जा रहे हैं। आज अटेंडेंस काफी अच्छा रहा।
गोपाल जी को सुनाई नहीं दे रहा शायद।
गोपाल जी तो एवरग्रीन है, उसको जितना दाढ़ी रख दिया सब सुनता है वो, बहुत ज्यादा।
I request to any all the participants, if they have any questions, they can unmute and ask the speaker. I believe कोई क्वेश्चंस नहीं है, पार्टिसिपेंट समझे अच्छे से सर, आपने पूरा किया है अच्छे से।
आप ऐसी हो सकते हैं, ठीक है।
एंड हमारे पास प्रेसिडेंट महेंद्र नाटा जी हैं जो क्वेश्चन पूछे हैं, तो आई रिक्वेस्ट टू आवर सेक्रेटरी राहुल लुंटा जी to give the formal vote of thanks. राहुल भैया।
हाँ गोपाल, गुड इवनिंग सर। सर गुड इवनिंग सर।
सर आपका फ्री में आपको ये भी मिल गया भैया, अभी तो एक ओपिनियन भी।
ओपिनियन आप क्या फ्री में, आप तो टैक्स भर दिए पहले।
पहले पैसा देके ले लेते तो नहीं लगता ना टैक्स।
नहीं, हम बोले ना वो थोड़ा प्रसाद देके दूर भगाने वाला हिसाब था, तो हम लोग भी थोड़ा सा उस हिसाब से रहते हैं। सर थैंक यू वेरी मच सर। मनोज जी सर, आप तो हमारे चहेते हैं ही। यू आर ऑफ कोर्स पार्ट ऑफ द एसोसिएशन सर, एंड वी आर वेरी प्राउड टू हैव यू टू बी पार्ट ऑफ आवर एसोसिएशन। एंड सर हर बार हम लोग को आपके एंड से काफी सपोर्ट मिलता है, हम जब आपको बुलाते हैं आप हमेशा हमारे लिए अवेलेबल रहते हैं सर, ये हमारे लिए बहुत बड़ी बात है। थैंक यू वेरी मच सर फॉर योर टाइम एंड फॉर शेयरिंग योर नॉलेज सर, वंडरफुल। बजट में जैसे आप समझ ही रहे हैं काफी सारे हमारे क्वेश्चंस थे जिसको आपने एकदम हमें हेल्प किया सर। होपफुली हम आपको फिर से बुलाएंगे अप्रैल मई में, जब दोबारा एक बार बजट पास होगा तब शायद थोड़ा सा इम्प्लीमेंट होने जब जाएगा तो कुछ और फाइनल पॉइंट समझने के लिए। बट सर थैंक यू वेरी मच फॉर योर टाइम एंड फॉर द एक्सीलेंट डेलिब्रेशन सर। आप खुद ही समझ गए सर, अटेंडेंस देख के आपको समझ में आ ही गया कि लोग कितना पार्टिसिपेट किए और कितना अच्छा लगा सबको सर। Thank you very much on behalf of the association and for behalf of all the participants, over 150 plus participants. Thank you very much, sir. And I would also like to thank everyone who had participated in the meeting today for making this meeting a great success. Thank you. Thank you, sir.
Thank you.
थैंक यू मनोज जी।
Thank you, man.
एक छोटा सा क्विक अनाउंसमेंट भी है सर। 26 और 27 फरवरी को हमारा एक एक्सकर्शन हो रहा है। वी आर गोइंग फॉर small 2-day excursion in Joka for peace and meditation. तो सर उसका भी डिटेल्स हमारे ग्रुप्स में हमारे मेंबर्स लोग को सर्कुलेट किया जा रहा है। We request everyone to please participate and that too is going to be a very good program. I'm sure you are going to enjoy, all those who are going to join us are going to enjoy the program. सर आपसे भी निवेदन है प्लीज आप भी ज्वाइन करें हमें। 26, 27 सर होपफुली थोड़ा सा हल्का टाइम रहेगा, so that is the right time for us to take some break. So thank you everyone and stay safe, stay healthy. Thank you. Thank you. ठीक है गोपाल?
ठीक है, we are closing the
Yes.